Welcome, guys, back to another video. Simple trading success with Jordan, where I help traders. I help you simplify your trading process as well as elevate your mindset when it comes to wealth principles. Now, in this video, it's going to be my second part of the series that is called Great Gains: The Secrets of Spotting Key Zones and Winning Moves. And this is going to be part two. So, in our last video, part one, I briefly mentioned we talked about liquidity, right? And so what I want to do is want to have a recap on that. And basically, again, liquidity is what? It's where the money is. And one thing I love to ask myself when I'm coming into the market is where is the money, right? And so let's go to our chart really quick. I'm looking at a commodity today, which is actually gold, right? Gold against the US dollar. And if you look at this price here, what's happening is that you can see the market has been going up, right? And when I look at this chart, I want to ask myself, okay, where is the money? Because if I understand where the money is, I can get an idea of where the market is heading, and I can get an idea of where to prepare myself to take an opportunity. Now, in part one, we also talked about support and resistance zones, right? So asking myself, where is the money? A lot of times, the best way for me to see it, because I'm really not going to know exactly where it is, right? But the best way for me to see it is saying, okay, well, where is the support and resistance? So let's do this in real time in a practical sense. If we went back, if we look at price now, right? And if we went back previously, we could see one thing. We could see definitely here we had some we had equal highs here, right? And we can see that the market broke these highs. We can see there was a support and resistance zone right here, right? We can see that there was a zone there, and at some point, sorry guys, trying to get my here it is, my rectangle tool. At some point, we saw that there was a zone here, and at some point, the market kept coming up to test the zone, and we would have saw, wow, we could have, you could have been taking sells, right? And then at some point, the market broke, and it started to buys, right? And so, what happens here is one thing is that we learned that in the first part one, we learned that a lot of times when you have equal highs, right? A lot of time we have these equal highs or even equal lows, right? A lot of times we know that up here there's liquidity, meaning that there is money here. Why? Because why is there money here? Because traders have put their stop losses up here in this area, right? Because what happened? The market began to drop here, right? Let's take this for example. The market began to drop in certain areas. Uh, let's take this for example. Let's see. Excuse me. The market dropped here, right? And so what happened was you're going to see a lot of traders. They're going to get in with these sell orders, right? Most likely sell limits or sell executions. And then they put their stops up here because they said the market is selling. And so the market does that. They were on the right side, but at some point the market needs to retrace. And then at some point it comes back up, and you can see here all this money where these stops were. If these traders didn't get out, if they kept holding their positions, the market took them out of their stops, right? Took them out of their stop losses. So grabbed all this money up here. And then also we could have probably possibly see where there were traders that they also did buy stops. So meaning that they expected the market to come up, hit this level, break, and then keep going up. And so those traders would have had stops. Those traders would have had stops down here. And so the market, and for some of them, because you didn't see the zone yet, right? So for a lot of these traders, they probably would have had their stops right here, and their stop loss is here. So what happened? The market came up, collected, that order, and then it came right back down. And so now the market collected all that, those stop losses. It collected all that money because they were on the wrong side of the market. Now the people that were on the right side of the market, the sellers, they made money as long as they got out, because at some point, a couple of days later, when the market came up, now is these traders that were holding, thinking, man, this thing's gonna run for weeks or months. They were sadly mistaken, and the market came up and it took all their money. And now, and so let's talk about this. So we talked about, and what do I mean by this, right? Support and resistance zone. Let's go limit orders. We talked about the limit orders, right? Those buy limits. So what happens? People normally buy above the support, right? And they put the stop loss below the equal lows, right? And so we just seen this here, where let's say limit orders, it would be smart to buy in this buy here, but right, but still we could have had some people that said, okay, well, the market came down to here, and we see that the market is gonna buy. Maybe they came here, they said the market is gonna buy, and guess what? We're gonna have a stop losses here, and the market brought for a little bit, and then it came down and took them out. So those limit orders, uh, unless they had a huge stop loss, and then the market retraced, and they would have made money. But otherwise, they made money here. Otherwise, the market came down, they had a tight stop loss, and took them out of the trade. So we see where limit orders, those buy limits, could work for you or against you. We also see where sell limits, right? And that would be the people that said, okay, the market is dropping. Here they see this big red candle. They said, we're going to wait for a retracement. Maybe they put their limit order here and they put their stop loss above the high. Market came back, collected the order. They went a little bit drawdown, a little drawdown here, and then the market dropped. And those people were on the right side of the market. They would have made money, right? And then we also talked about stop orders, right? The buy stops. So we just mentioned that really quick. We had the buy stops, the people that said, okay, the market is gonna, oh look, it's buying and it's gonna break this high right here, right? So we're gonna get into buy stops right when it breaks here, and that way we're gonna keep going up and make money. And they put their stops, and they put their stops down here. And the market collected the order, boom, dropped, put them in drawdown, and took the stop loss out. As well as let's talk about sell stops, right? And so the market, uh, they seen the market dropping, right? They seen this level at that time. They probably didn't see this level being made, but you would have had some people that got sell stops, let's say, and they boom, they made money, got on the right side of the market, and hopefully they got out and they made money. But then you might have had people that came down to here and saw from previously. Look at this. They saw this right here. They saw this equal low being made, and so they said, "Oh man, great! This thing is finally about to break this low, and so we want to make money as it breaks. So sell stops. They put the stop loss here. Market came right here, collected their order, but didn't drop. Rejected. Came back. Boom. They got stopped out. So they were on the wrong side of the market. And so my point in showing you this is that I want to show you the power that you could either be in profit of knowing where the money is and where the market is headed going, or you will see your profit gone. Right? So just boom. And so how do we resolve this? Well, one of the things that I've learned in my experience and what I'm gonna show you is that one of the ways to resolve this is to simply scale out. And what do I mean by that? You want to go on higher time frames. Okay? And so this is what we're going to talk about. And so what are we looking for in higher time frames? What are we looking for on higher time frames? Those support and resistance zones, guys. And so I show those stop orders and limit orders for a reason, because I want you to understand as the market's moving, guess what it's doing? yes, it's going in the direction of where the market movers want the money to go, where the institutions, corporations, those those big entities that are moving the market where it wants to go. But also, there are moments where the market retraces and comes back because it's getting that money, and then it's going to go in this direction. It's going to stop people out, take their money, and then go where it intended to go. So let's go to the chart and talk about this. Now, I showed you those demonstrations that we identified, right? So let's go back. We're looking at, for example, a 15-minute time frame. And right, and we can see that according to price, what I marked up, showing that these um these equal highs, right, that we're gonna have most likely a collection, right, of liquidity. As well as, let's look at this. We also had some, we also had equal lows here. It was a smaller, it was on a smaller time frame, but look, you had these equal lows here. And guess what the market did? It came down. There's some liquidity there. You see that? Market. So the market came down, grabbed all these stops because most likely people said, oh man, equal lows is going to buy. So it came down, grabbed their stops, collected that money, went back and forth, did his thing. And then guess what? It started this little uptrend here. Started this uptrend that's happening. So market collected, right? Created this support zone here. Created this support zone. Support and resistance zone. We see ceiling and a floor. And it continued up. And then we see the same thing. Remember, we had a high here. We have a high here. And it tested that area. Market started to drop. So guess what happened there? You probably have people that got in for sells as well, right? Probably down here. Put their stop losses. They were in the right for a bit. And then it came down to collect the money. But we, again, as I said before, we know that when you normally have equal highs or equal lows, there's liquidity. And so the market is doing just that, it's collecting all this money. And so the question is, what's going to happen now? What is a potential? We don't know for sure what's going to happen, right? We don't know for sure what the market is going to do, but we can get an idea of what's going to happen. And so as you can see, the market likes to follow the trend, right? The trend, we set an uptrend. We see that the market broke here, and now this has become a support level, right? So is it very possible the market could come down, touch this trend line, and continue up, right? Or is it possible that the market? So let's do this. Hold on. So is it possible that the market could come hit this trend line and then push up? Or is it possible the market can hit this trend line and the support and break, right? And how do we kind of get an idea to see that? Well, one way is to scale out. I'm going to go to the hour time frame. Look at this. I'm going to go to hour time frame. And now I can see those equal highs a little better, right? Equal high, equal high. So I know there's liquidity there, right? We can also see those equal lows as we saw before, right? We saw a little liquidity here. Actually, an equal low, if you go back to previous on a bigger time frame, we saw that here, right? And so we want to, so I mean that's a big grab of liquidity, but I want to say as a liquidity grab on the time frame we're looking at, that's a break of structure. But if we're looking at the structure continuing going up right now, we could be looking at this test of the support. And so I'm looking at the 1 hour, right? And so what I want to also do is I'm gonna scale out again. I want to look at the 4 hour. What is happening? Where are there major support and resistances? When this 4 hour, look at this. Definitely right here. I can see the ceiling has been respected. The ceiling has been respected. Ceiling, resistance zone, came in the zone, played, drop. Resistance zone, came in the zone, played, drop. Came in the zone, played, drop. Finally came in the zone and rejected, right? And now it's up here. And now, if we look even on its high time frame, we can see that there has been a zone created here of resistance. Let me change this color really quick so you guys can see this. And so now we can see that there has been a zone of resistance right here created. And so now we want to say, okay, well, what's the potential that's about to happen? Again, we don't know for sure what's gonna happen, right? What we can do is estimate, right? And we can get an idea. And this is what I do. I look on higher time frames. I scale out. Just simply scale out, guys. Some of you guys might be trading on a 1 minute, 5 minute time frame. That's cool, right? But to get the bigger picture, scale out, right? Scale out so you can see the support and resistance zone. Scale out. And now let's go to our chart for a second. So we're back here in gold, right? Now I want you to look at this. So we determined that we have these two major support and resistance zones, right? According to currently where the market is. So that's why I also mentioned we don't want to trade anywhere here in this time frame. I mean in this zone, right? We want to wait until it gets to these levels, and then we can see how it reject. Then we might be able to get a little in that zone as rejects, whether it's a sell or whether it's a buy, right? But here's the thing. So according to where time we already missed this. So we would have missed this run already, right? This run has already happened, right? As well as this run is beginning to happen. It's potential, So this is potential something we could have caught now or wait a little bit for a retracement, just as long as your stop loss is good. But at the same time, we want to look at what's happening here, right? And so we talked about how now if I came back down to a 15-minute time frame, right? Because remember on 1 hour, right? This is what we see, right? We we see the market a little different. You see the highs and the lows different. But however, even on the 1 hour as well as the 50 minutes, check this out. We have what? Some equal highs here, right? And if I go back to the 15, we can see here we have those equal highs. And so what happened here? What happened here? The market came up and said, most likely people started to sell, right? People started to sell. They set their stop losses up here. Market said, we're going to go and collect this money. And then we're going to potentially continue down or not. I don't know. This is what's happening right now in the market. So what do we want to do now? We saw the support and resistance up here. So what this tells us is that sometimes you see the liquidity, right? The liquidity is happening. And now the liquidity is happening here. And they say, well, where are the next potential levels or next potential areas of liquidity? Where potentially is the money at? Now, the question is, could the money be up here above these highs? Or is this the liquidity that needs to be grabbed? And potentially right now, are we the money? Because sometimes you don't see the liquidity, you can be the liquidity. And so we're only able to determine this by looking at these big zones. Because we look at higher time frames. We got these big support and resistance zones. Now we can see where the market is potentially heading and potentially the direction of where we want to go. Right? And so let's talk about this. A lot of times when you see liquidity grabs, when you see liquidity being satisfied, let's go to here. You'll notice that you'll have things like long wicks and you'll have large bearish and or bullish candles. Okay? And so when we go back to our chart for a second, we will notice that when these highs were broken, man, we got some serious movement here. We got some nice long candles. I see a lot of wicks happening here, right? I even want to look at the hour sometimes to see what's happening. Look at this large bullish candle. this large bearish candle. You got all these wicks. This is a good possibility that this was just grab liquidity and it's going to continue back down. And knowing that, I'm looking at this large green candle was rejected off the zone, knowing that its potential could come right here as well and just follow the trend and keep going up. And so I could be looking potentially for buys down here, or I could be looking to get in this sell. And so you guys know on some of my videos I talked about the rejection out of the zone. When you get that nice big drop, that candle on the retest. Now this is one time, so normally I like to wait till it comes back and then get another candle like this, and then you get half of the candle and you ride it. But it's potential that this could be falling now. So we can just kind of see. Let's see what happens. Say boom, look at this. Got market coming back up to the zone, right? Coming up to the zone, right? Look at that. We're getting that rejection. So it could be this rejection. We have like this potential retest right here, just touch the zone, and it could be falling back down. So this is where we could have been taking sells right here, because I think we are the liquidity. I think we're being satisfied for this right here. And then the market wants to go down. I don't really see any reason for the market to reject here and then continue up. If it rejects going up, I think it would hit the trend, this zone first. So let's see what happens. Market's coming. Okay, let's see if it goes back. Oh, look at that. Hits the zone. Let's see if it breaks. Look at that. Hits the zone. Continues the trend. Look at that. Continues the trend. Continues the trend. Look at that. Hits the zone again. Look. Now this is the retest I was talking about. And so you were only able to see this because you scaled out on a higher time frame to see how this liquidity, these equal highs, that we know that there's stop loss up here that had to be dealt with. And so I believe that this is the area of liquidity. And I still believe it is that because I haven't really seen no equal highs or lows like that yet. And so I'm believing that this zone on a high time frame for this lower time frame, 15-minute, right here is going to be respected. It's going to come down. Now the question is, will it break this trend or not? Right? And so let's see what happens. We gotta, again, we talked about those big wicks. We have big large candle here. We have we're almost getting a large candle here. I want to see a little more of a rejection out of here. And let's see what happens. Okay. And boom, right there. Nice bearish pattern. And so this is probably where I would have took my trade right here. I would have took my trade right here, especially if I saw some other confirmations with the EMAs, and I would get my RTA and say, okay, well, what is the? I'm not gonna go into that in this video. That's another video, but I would get my RTA and say, okay, what is the stop loss? You know, somewhere above the zone it would be, and I would take this down. I believe it's gonna break the trend because I'm looking at the retest of the zone. Right, these zones normally happens. You got that retest, and it likes to tank. And if not, it's cool. It'll come up, hit my stop, or I'll just get out. So we'll see what happens. Okay, I will get in the trade there. Boom, see that? And so we are I think we're the liquidity. We're the liquidity that's being resolved. Remember we talked about highs with 50-minute. Remember, surpass these highs, big large candles. Wait, even here, big large candles. On these, now we have these equal highs. Big large candles, a lot of wicks. Coming up, comes to the zone. Even kind of start a new structure on a lower time frame. And we're coming down. And so it's hard to see that until you look on a higher time frame. And you can clearly see the rejections. Right? And so I would have been in this trade already, right here. And I would ride it down here. And we'll see what happens. And market's continuing down. Let's see if it breaks this small resistance zone that we just had. Looks like it's respecting it. Coming back up for another retest. Let's see if it rejects. So like this is a nice third retest. Right there. See that? In. I'm in. Right there. Nice rejection. Big, large, bearish candle. Right? Big, large, bearish candle. And boom. This is currently where the market is at. And so if you were in this, you would be in profit right now. And I believe this market is going to continue down. And you guys can come back and back test this and see if I was right on this video as I'm recording this. This right now is August 28th, 2024. So whenever you're watching this video, let's see. Let's see. Did gold drop? Let's see. Is gold going to continue? Is gold going to continue to drop to the zone? So we'll find out. We'll find out later. Does gold do it? Yeah. Is this kind of thing gonna happen? Or is gold going to say, well, nope, we're gonna respect the trend. Well, we don't know for sure, but the point of this video is to show you we can at least look at these areas. Oops, sorry. We can at least look at these areas of where the potential liquidity is. So we can get an idea of what's going to happen. And so I believe it's going to drop because we see that bigger time frame resistance disrespected. And guess what? If we look on a lower time frame, what do we have here now? What do we have here? Equal lows. And so what does that tell me? There's money down here. That tells me that people saw this thing buying. They started buying. Probably up here somewhere. And they got their stops down here. And so I believe it's going to sweep out these stops. And the question is either going to make new lows, higher new lows here, some in this area, and continue up, or we're just going to see this thing keep taking down to the big support lines, support zone. But what I want to demonstrate to you guys is that looking out on bigger time frames will allow you to see the areas of where the market is headed. So even these small time frames where liquidity needs to be grabbed, where the money needs to be grabbed, right? Whether people are doing limit orders, buy, sell limit orders, or whether they're doing sell, stop orders, and as well as whether there are stop losses there. Where's the market headed? But remember, the main thing is this. Remember, a crucial thing is that the market is going to follow the trend. The market is always going to follow some. And how do you see the trend? You're going to have to look on the bigger timelines. You're going to have to look on the bigger time frames. We know by looking here on the 4-hour, on the same chart I just showed you, we know the market is going to go up. However, we identified that we have major levels that when the market goes up, there's major levels is going to need to respect so far as support if it continues the trend from this point, because it could continue down. It could break here. It could break here, right? It could break this structure and continue down. And who knows? We might hit this structure and then it bounces up. So we don't know for sure. So this is why we have to play it zone by zone. But you can look on the higher time frames and get an idea of where these key pivotal moments are. This way, you are not trading in here. Now, on a very small time frame, in a minute, 5 minute, you probably could have traded in the zone. But when we're dealing with like swing trading and we're really trying to get proper good risk to reward, and we don't want to be on a roller coaster, I think it's in my opinion, my professional advice is best to wait for these major zones. Because look, if you were to trade it in this area, this is just a roller coaster. Look, this is just a roller coaster. In this area here, it's a roller coaster, just up and down, 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 up and down. But here, trading out of here, up, boom, sell. Okay, you come back, but you still are, you're not really in much drawdown, or it's at your break even, and then it goes. So coming out of here makes more sense. You have a little bit of drawdown, right? Coming out here, even for a short buy, right, makes more sense. Coming out of here makes more sense. But even here, I wouldn't have suggested taking that. Only reason this is good because it's on the trend line. And so we talked about that support and resistance. We're talking about a trend line is simply a diagonal support and resistance. So this is also a good way to determine, right? So we're looking at these areas. These are the areas we want to wait for the trade, because this is where you can see where the money is. But you've got to scale out. You've got to scale out. See that? Now you can really see what's happening. Scale out. Okay, guys, I hope that this helped. This is part 2. This was part 2 of our series, Great Gains, Secrets of Spotting Key Zones and Winning Moves. Guys, stay tuned for part 3. We're gonna go even more in depth, and I'm gonna start breaking down some more things as we go through this 5-part series. And if you really pay attention in these 5-part series, you're gonna be able to gain a lot, and it's gonna really help you step up to the next level and really trade in efficiently and kind of seeing what's happening with the market and seeing this market structure and the institutional trade, and hopefully from a more simplistic point of view. So guys, thank you for tuning into this video, and I'll see you on the next one. Peace and blessings.